Towards the end of a financial year, we usually see investors make changes to their investments. And also, it's a good opportunity to look at your superannuation to see if you can take advantage of possible tax concessions. I'm Jessica Amir with Bell Direct, and with us is an SMSF expert, Olivia Long. Olivia, it's great to see you. Thanks for coming in.
You're welcome.
So first up, just tell us, with 30 June being around the corner, ending the 2021 financial year, what should investors and people with superannuation be considering?
So there's the usual end of financial year compliance. So for those that are contributing to super, making sure that you top up any contributions well and truly prior to 30 June. And for those that are in retirement phase or drawing down from their super, making sure that you've drawn down your minimum amounts well and truly before 30 June, keeping in mind that they've been half this financial year. But I've got a strategy to share with you today that many accountants aren't even aware of, that specifically relates to people with self-managed super funds. So now, this strategy is useful for people who have a high taxable income this year. So anyone who's had a significant capital gains tax event, or for anyone who's planning to retire, because this strategy gives them a unique opportunity to double dip on tax deductible contributions up to $52,500.
So a double dip on tax deductions, I'm going to be honest, it sounds a little too good to be true. So how does that work with people like us who are still working, contributing to super?
Okay, well, as you know, the concessional contribution cap's increasing from the 1st of July to $27,500. What people should consider is effectively bringing forward next year's contribution, making the payment to the super fund in June. Now, by doing so, a person can actually claim a tax deduction for the total $52,500 in this current year. The only catch is that the payment must be received as a separate payment by the fund in June. So be mindful not to leave making the contribution to the last minute when it can be missed.
And just lastly, what else should people be considering with their superannuation?
Okay, well, let's start with my personal favourite, and that's free super from the government, which is actually known as a government co-contribution. So if you earn at least 10% of your income from employment, the government may give you up to $500 as a co-contribution. So to be eligible for this, you need to be less than 71 years old and earn less than $39,837 and make your own personal contribution of $1,000 into super. Anyone that earns less than $54,837 also qualifies to get some level of rebate back from the government. For those that take advantage of salary sacrificing, they should generally review their arrangements each year in June, but this year more so than ever because super guarantee is increasing from 9.5% to 10%. As you know, contributions are also going up, so it's timely that people look at what they're actually sacrificing into their super fund. So now let's think about those over the age of 58 that have a transition to retirement pension or a TTR. Now, TTR can generally be started once you reach preservation age, which at the moment is 58, while still working. And this enables people to start drawing down from their superannuation up to a maximum of 10% of their super balance each year. Now, it's important to understand, though, that a transition to retirement pension isn't actually in retirement phase, and any income and gains are still taxed at up to 15%. However, if you've met a condition of release, so such as a change of employment over the age of 60, you actually qualify to convert your TTR into a retirement phase pension, which is known as an account-based pension. Now, account-based pensions have a zero tax environment, so zero tax on any income and capital gains. So I think it's really important that anyone that has a transition to retirement pension talk to their accountants about their circumstances and make sure that they move that balance into the tax-free environment as quickly as possible.
Wonderful. Some great tips and strategies. Olivia Long, thank you so much.
Thanks, Jess.
For more information on self-managed super funds, please head to Bell Direct.